But fresh U.S. inflation data has raised the odds of the Fed getting rid of its patient guidance. And what does this mean for trading? Let's talk to Jesper Bargmann of Nordea Markets Asia. Very nice to see you.
Thank you.
So what do you think? Is it really that important that Fed actually drops its patient position in later this month, March?
It is definitely. It's the next step that everyone's waiting for, trying to predict the first hike.
When do you think it's going to be?
Well,
if they drop the patient guidance, then is it June, July, September, August?
Well, the thing was, Yellen told us in December that meant an extra, after 2 months or more, and suddenly now she's sort of backtracking a little bit from that and saying it could be any time. So she's buying herself a little bit of freedom around it, but that needs to be removed first. As soon as patient is gone, then it could be any day. And that opens up for June, a little bit more than before maybe. So June or September is where the market's split, and I think if you see what's priced in, we're still sort of towards September. And I think the people who are expecting the very end of the year may be looking at September now. So the market's pretty split still, and it's therefore it's so interesting to see when she drops it.
Yeah, there's been a close correlation, especially with the perception of when that hike will be with what's been happening with the 2-year U.S. Treasury yield. Do you think a September rate hike is actually priced in?
It's a little bit hard to say because there is a great demand for treasuries at the moment from reserve managers and others as a kind of a safe haven with everything that's going on in Europe and stuff, and that keeps the demand and keeps pressure on the U.S. yields. So it's very hard to actually gauge what's priced in. But if you read commentary and so on, I think we're looking at June will be a surprise, and we'll see dollar buying on the back of that. If the market consensus becomes September, we may be pretty well priced where we are at the moment.
So the U.S. dollar is still the king, nearing an 11-year high. How much further upside do you see, and which pairs would you be actually looking into?
I think the obvious one to focus on is the euro-dollar relationship. I mean, people used to stay away from it a little bit because it was too obvious, but we have this big divergence in central bank policies, and it's why not just focus on the simple trade? Yeah. And I think that's
so what's
definitely
your target?
Further to go.
Mid-year target?
As long as we're guessing, I definitely think there will be a demand for dollars, and I think we will see new lows for the year, and we will probably test below 110.
110. Wow. The Aussie, it's at about 70, just below 78. How much downside do you see?
Well, I think the markets are looking for actually another cut from Australia. I'm not so sure. They may actually cut, but I still think we may be close to an equilibrium, and I'm actually inclined to be long Aussie dollar at these levels.
Oh, really?
Yeah, I think there's so much bad news priced in. I think China may start consuming a bit more. There's a lot of doom and gloom priced in there. Copper prices have started looking like they may be bottoming. And if we see commodities just pick up a little bit, there's still a yield pickup in Australia. And I think levels around 77, 78 is a good opportunity.